Here is something most creditors do not realize. A bankruptcy filing does not make your debtor invisible. It makes them more exposed than at any other point in their financial life. The schedules they file with the court are signed under penalty of perjury and entered into the public federal record. Every bank account, every piece of real estate, every transfer of property in the past 2 years, every business interest, every source of income, all of it required to be disclosed. And when a debtor lies on those schedules, that is a federal crime. Your job as a creditor is to find the discrepancy between what they declared and what actually exists. Here is the investigation methodology that works. Start with PACER, the federal court's electronic record system. Pull the complete bankruptcy filing. Read Schedule AB for assets, Schedule I for income, Schedule J for expenses, and the Statement of Financial Affairs for transfers and business interests. Then run independent investigation. Search property records in every state and county where the debtor has lived in the past 5 years. Search corporate and LLC filing databases for business ownership. Check vehicle registration. Cross-reference income against any publicly available business information. Build a side-by-side comparison. Asset found in investigation but missing from Schedule B. That is a target. Transfer disclosed on the Statement of Financial Affairs that looks undervalued. That is a target. Income reported on Schedule Y that is dramatically below what the business generates. That is a target. Report your findings to the trustee with documentation. Good trustees act on credible, documented leads. At peoplelocatorskiptracing.com, this is exactly what we do. We have been building the cross-reference investigations that catch hidden assets since 2004 for creditors, collection attorneys, and bankruptcy trustees nationwide. Visit peoplelocatorskiptracing.com and let us run your debtor's investigation.